Hello, my name is Chris Paschall, Global Vice President of Oil and Gas and Refining. In today's session, we're going to discuss maintenance spending for 2016 in the U.S., as well as briefly look back at 2015, perhaps take a peek at 2017. But before we get into the numbers, it would be useful to look at two different factors that influence the turnaround activity. The first one is utilization rate. On the upper left-hand corner, the red diamonds, that's currently where utilization for 2016. You can see that we're pretty much in line for all the previous years. But what I want you to pay particular close attention to is the blue line, which is the utilization rate for 2015. As refiners continue to, the profit margins for refiners continue to increase, demand continue to increase as well because of the low-priced commodity at the pump, utilization continued to rise. We actually hit a high of 96.1 utilization in August of 2015. We ran equivalent of 17 million barrels a day for 1 week in that period, which is the high that we've ever seen. This influences turnaround activity for 2015 as well as 2016. Because the high utilization and refiners are running almost wide out and really hard, the unplanned events for 2015 was relatively high at 332 events on major units in the U.S. You can also see the planned activity was relatively equivalent for 2014. As you move into 2016, you can see the number of planned units for spring and fall in 2016 on major units is relatively much lower than 2015. We hope that those numbers will increase as we have more clarity for the rest of the year as we move through the rest of the year. But also, the spending will increase as well. Currently, for 2015, when you look at spending, we're tracking 165 projects worth $821 million of activity spent on turnaround activity for last year. When you move forward and look at 2016 and 2017, 2016 has 130 projects worth $770 million, so it's a bit short in comparison to 2015. But we're also seeing 2017 as perhaps a bigger year. There's currently 138 projects scheduled for turnaround worth $820 million of spend. So this year could be equivalent of the 2015 in terms of spend, but as the utilization continues, consumption continues, we could see 2017 be a breakout year. We could see some activity for 2016 be delayed to 2017, but at some point refiners will have to take a major turnaround on some of these major units. Now, getting into the margins, what can also influence the turnaround activity is the margin for both diesel as well as gasoline. On the upper left-hand corner, you can see the profit margin for diesel is, for 2016 is well below 2015 as well as your high and low average. If you look at the inventory that we have on the lower left-hand corner, you can see inventory, the blue line. As you move to the right, the blue line is on the upper end of the inventory. So because we have a lot of inventory, it's reflective in the global market. The profit margin for diesel has started to compress a bit. On the flip side, when you look at gasoline, the gasoline margin on the upper right-hand corner, the green diamonds, you can see it's well above 2015 as well as the 5-year high and low averages. So because we see low prices at the pump, margins are really great for refiners. Crude oil remains relatively low, so when you look at the margin for gasoline, it's certainly very healthy. So as you move into 2016 for the rest of the year, if that margin remains relatively healthy, we could see some delay of some of the turnaround activity scheduled for this year move into 2017. So it appears at the moment that 2017 certainly could be a much better year for turnaround activity in comparison to the previous couple of years. This currently concludes our segment on the maintenance spending for the U.S. For more information, please visit our website at industrialinfo.com.